Hello, my dear students. Lucas Commerce Academy, the power of accounting, welcomes you. Today, we are going to discuss the second method in joint venture. In previous video, we have discussed first method. There, we have written journal entries and ledger accounts in the books of A. That means we are A. In our books, joint venture account, B account are prepared. In joint venture account, all expenses are debited and all incomes are credited. The balance of that account represents profit or loss which is to be shared between the co-venturers. Similarly, B account also we have prepared. In B account, a single journal entry is to be posted, that is advance paid and advance received. Advance received from B, the journal entry cash or bank or bills receivable account data to B account. When advance paid to B, B's account data to cash account or bank account or bills payable account. Then all remaining entries are taken from the joint venture. The balance of this account indicates the amount due from or due to co-venturer. If this balance is settled, then B's account will be closed. Now, we are going to discuss the second method. Under this method, all co-venturers records joint venture transactions in their books. That means each co-venturer maintained books of accounts under this method. This method is an extension to first method. Whatever journal entries we have passed there, the same journal entries are passed here also. We need not pass any new journal entry. So, for example, ledger accounts in the books of A, we are preparing, that means we are A. As we are A, we have to prepare two accounts. Number one, joint venture account, number two, B account. It is prepared, these are prepared in the same manner as in the case of first method. Then come to B's books. In this case, we are B. In our books, we are going to prepare joint venture account and A's account. The entries are posted here also, same as in the case of first method. But the name of the co-venturer is changed. Now we are going to discuss memorandum joint venture method. This method is an alternative to second method. In this method, each co-venturer records only those transactions which are affected by him. The transactions of others should be ignored. For example, in the books of A, his transactions only recorded. B's transactions are ignored here. Similarly, in B's books, only his transactions are recorded. A's transaction should be ignored. At the end of the period, each party must render their statement to other party for the purpose of calculation of profit or loss and the amount due from or due to other co-venturer. So under this method, how to prepare ledger accounts in both the parties? Let us see. Books of A, that means we are A. We are going to prepare two accounts. First one, memorandum joint venture account. Second one, joint venture with B's account. Joint venture with B's account. So how to prepare memorandum joint venture account? It is a nominal account in which all expenses are debited and all incomes are credited. The balance of this account represents profit or loss on joint venture, which is to be shared between the parties. But this account is prepared on the basis of memorandum. So, memorandum means when the account is not prepared in accordance with the double entry system. That means we need not pass journal entries for this account. It is prepared outside books of account. It is prepared to just to know the profit or loss. How to prepare this account? Debit side to A's account. Under that, purchases, cash, creditors, again cash for sending the goods to B, his commission, his interest, his discount charges. Similarly, to B's account, under that same. Come to credit side, by A's account, under that sales, by B's account, under that sales. So here or in this account, no journal entries are to be passed. Then come to joint venture with B's account. This is a very, very important account. In this account, only the transactions of A are recorded. Here we are A. How to pass journal entries under this method? The first one, when we supplies goods to B, the journal entry for this is joint venture with B's account data to purchases account. When we purchase goods and send to B, joint venture account data to cash or bank account. When we purchase on credit, joint venture with B's account data to creditors account. When we incur expenses for sending the goods to B, joint venture with B's account data to cash account. When we receive commission, joint venture with B's account data to commission account. When we receive interest, joint venture with B's account data to interest account. When we incur discount charges, joint venture with B's account data to discount account. Our profit, joint venture with B's account data to profit and loss account. Our sales, cash or bank account data to joint venture with B's account. Our stock taken over, goods or purchases account data to joint venture with B's account. Then advance received from B, cash or bank or bills receivable account data to joint venture with B's account. Next, when advance paid to B, joint venture with B's account data to cash or bank or bills payable account. Then this account is to be balanced, which indicates the amount due to or due from co-venturer. If this balance is settled, then the joint venture with B's account will be closed. So these are the journal entries are passed under memorandum joint venture method. Under this method, each party records only those transactions which are affected by him. This is the very important. Memorandum joint venture account is prepared on the basis of memorandum. That means that account is not prepared under double entry system. We need not pass journal entries for that account. These are the important things you should remember. Next, similarly in the books of B. In the books of B, we are going to prepare memorandum joint venture account. Second one, joint venture with A's account. How to prepare memorandum joint venture account? It is prepared in the same manner as in the case of books of A, no difference between these two. Then come to joint venture with A's account. It is prepared in the same manner as in the case of A, but the name of co-venturer is changed. That's all. So these are the things we should remember while passing journal entries and preparing ledger accounts under second method and alternative to second method, that is memorandum joint venture method. In next video, we are going to discuss third method when separate set of books are maintained. Till then, bye. Thank you. Thank you very much.